Have you ever seen a huge price move just rip across the chart and think to yourself, how on earth did the pros see that coming? Well, today, we're pulling back the curtain. We're not just going to look at the result. We're going to deconstruct the entire thought process behind a major Bitcoin move. Let's get into the case study. Okay, but before we go any further, we need to get this out of the way, and it's really important. What you're about to see is a breakdown of a professional analysis, and it is for educational purposes only. Seriously. The goal here is to learn the framework, to understand the thinking, not to get a trade signal. We're here to learn how to fish, not to be handed a fish, all right? Let's do it. So here's the game plan. We're actually going to start with the final conclusion, the verdict. Then we're going to work backward and look at the three pillars of evidence that got the analysts there: the macro engine, the market structure, and of course the fuel. And then we'll see how all of that gets boiled down into a clear, actionable playbook. So let's just cut right to the chase. What was the single biggest takeaway from all this data? The conclusion, stated right up front, was crystal clear. This upward trend is incredibly strong, and it's just entered a whole new phase. Let me show you the exact wording. Now, the language here is so important. When you hear a liquidity magnet, just think of a price level where a giant stack of orders is waiting. It literally pulls the price toward it. So when the analyst says it's been eaten, they mean that entire wall of orders got taken out, and a massive resistance level was just completely smashed. The market isn't banging its head on a ceiling anymore. Now it's looking to turn that old ceiling into a new floor. So how did they get to that verdict? Well, the first piece of the puzzle is the big picture, what the source calls the macro engine, and its status, full throttle. You can think of this as the powerful tailwind that's pushing this whole move forward. And there were two huge forces at work. First, Bitcoin dominance was on the rise. That just means Bitcoin was sucking up a larger and larger share of the entire crypto market. Money was flowing out of other coins and directly into Bitcoin. At the exact same time, USDT dominance was falling, fast. And that right there is a massive tell. It means people are dumping their stablecoins, their digital dollars, to buy crypto. That's fresh money coming off the sidelines and into the market. All right, on to the second audit, the market structure. This is where we zoom in and look at the chart itself, the battlefield. And what's happening here is a classic RS flip, where old resistance starts to act as new support. And check this out. This chart shows you exactly why the move was so explosive. This is a volume profile. It shows you where the trading action has happened in the past. And you can see this big gap, this vacuum zone, where almost no trading took place. That means there was basically zero friction, no one in the way to stop the price from just slicing right through. And yep, this quote from the analyst just says it all. It's the perfect description. When the price hits a low volume pocket like that, there's nothing to slow it down. It's an open runway, and the move can be just unbelievably fast. You know, the price action itself tells a story. This isn't some chaotic, messy spike up. It's a structured stair-step pattern. The price pushes up, pauses to catch its breath and consolidate, and then gets ready for the next move higher. That pattern screams confidence. It shows there's very little selling pressure. Buyers are just totally in control. Okay, so we've got the macro wind at our back, and we have a super clean chart structure. So what was the final piece? What actually lit the fuse on this breakout? This is our third audit, the fuel. The main target, that magnet, was hit, and now the market is looking for its next objective. And right here, you can literally see the cause and effect in action. The chart on the left, that heat map, shows this bright yellow line of liquidity. That was the magnet. And as soon as the price hit it, bam! Look at the chart on the right. Open interest, the total number of active trades, just exploded. That confirms it. Hitting that target triggered a huge wave of new positions, which is exactly what a real breakout looks like. But what were the big money traders doing? This is a big one. The long to short ratio for top traders was still sitting above 2-to-1. That means for every one big player betting against the move, there were two betting for it. The so-called smart money wasn't taking profits. They were still in the game. So, you've got this full throttle macro engine, you've got a confirmed breakout on the charts, and the rocket fuel has been ignited. What do you do now? This is where all that analysis gets turned into a concrete strategy, the analyst's playbook. And the most important thing here is discipline. That first press to fuel is gone, so the number one rule of the playbook is do not chase. Instead, you wait. You wait for the price to pull back and test that old resistance zone. Then you watch. You look for signs that buyers are stepping back in, and only if you see those signs do you execute the trade with a clear stop loss in place. Finally, you set your target, which is just the next logical pull of liquidity sitting up ahead. This last thought from the analyst just ties it all together so perfectly. The job of a professional isn't to get all emotional and chase big green candles. It's to use the data to find a high probability spot, set a trap, and then just patiently wait. It's the difference between being a gambler and being a hunter. And that wraps up our case study. We've seen how layering these different types of analysis, the big picture, the chart, and the raw order data, can build a really powerful thesis. So I'll leave you with this question to think about. Of those three pillars we looked at, the macro engine, the market structure, and the liquidity fuel, which one do you think is the most powerful predictor of what happens next?